Hey guys, Shooter from TradingApples.com. It's 2:08 p.m. September 1st, 2010. I just got into a long position on Amazon. Current price is 131.02. Entry price is 131.03. In some odd sense. Amazon had a pretty nice volume spike here, as you can see. After going through a pretty long consolidation phase here. So the idea with this is that we know that the bulls are alive from today. As you can see, price moved up very strongly this morning, along with the entire market. So what that really means is that the bulls are the group, or the force, I should say, that is prominent today and is powerful. And what that means is that when it comes time for the stock to decide that it needs to do something more, let's say after a consolidation period like we saw today, the likelihood that the bulls are still going to be alive and looking for positions is higher than the likelihood that the bears will be ready to seize price and move it down considerably, which could also happen. But I myself would put my money on the bulls today, especially since the entire market is moving in that direction. So my entry price was 131.03, as I said, currently up about $100 on the trade. And I'm looking for price to just keep moving up, probably for the rest of the day. It's 2:10 p.m. right now. The market closes at 3 Central Time where I am. And I'm just going to try to let this bake for a little bit. And hopefully the market catches on to that nice little volume spike there and generates some enthusiasm. And as you can see, price is currently moving up. Price is currently at 131.23. So hopefully this will be a good trade. I'll get back to you guys on it. Currently up about $650 on the trade. And I just wanted to discuss the idea behind this trade and how it was basically a prime setup that you would want to look for on a regular basis. So what happened was clearly the market opened up and started moving up really strongly in the morning, as you can see on the Qs, on the just about any stock was just zooming upward today. And then after that, it did that for probably an hour, a couple hours actually, and then what we see is just huge consolidation after that for a few hours. And at that point, you really have to ask yourself which way the market is likely to go after this, and what you would want to see to indicate one direction or another. Because, you know, as you can see now, it did move up considerably on a second leg here on very high volume, just like this morning. But it also very well could have moved down after that huge move up because of a lot of absorption. So what I was looking for basically was a break of this level here. As you can see, I drew a line there already, but it's about the 130.90 level. Also, the 131 level is a significant break. And there's a very important concept here that is kind of manifold. So I'll discuss the two important parts of that reasoning behind why I got into this position. The first reason is you can look at the beginning of the day like we talked about, and you can see that there is a really strong up move on high volume. So what this means is that the bulls are alive. We can assume that the bulls are here, they're present for whatever reason. We don't have to know the exact reason why, but they're definitely buying, and it's market wide. So it kind of sets the tone for everything, and it's a very psychological thing that happens when there's such a momentous up move like this. It kind of invites everyone in. Hey, let's all ride this thing up. And so everybody gets their bullish hat on, and it just becomes a thing. And so then, like we talked about, we see the consolidation. And like I said, you have to decide at that point what you think it's going to do. Wow, this is moving up really nicely. Currently up $770 on the trade. So what happened there was something really important, and you're not really gonna. It's not really gonna stick out unless somebody outlines it. But what we see here on this bar, okay, we see, looking at the volume here, all of these bars were around the same level, kind of low, a little bit higher than the other. But all of a sudden, we get this larger bar. See that one right there? It spikes up and doubles in volume. Now, if you look at the candlestick up there, the corresponding candlestick, what you see is a very small candlestick. And then after that, price kind of spikes up a little more, and volume even doubles after that. Um, so what that indicates, and also this was on a little bit of up movement as well. It wasn't as if price was moving down, and this volume, this doubling of volume, was not expressed in down movement, which is very important. Um, so then what we saw was that nice little spike of volume before the break of 131. All right, and then so that's your first signal. That's going to give it away to you. That's going to say something's about to happen. There's some volume coming in here. It's absorbing all of the supply that's could be around that area. And so you see nothing but higher volume after that as it breaks through 131. And as you can see, it's moved up over $1 from that point now, and I'm in 700 shares. So very good trade for me. Very happy with this. But that's the basic idea behind it. It's not really, in my mind at least, it's not much more difficult than that. I mean, it's a three-part system, basically. The bulls are alive. They're alive. The bears are hibernating because look at all this huge up movement. The entire market is up. Everybody's up. If you look down here at all the indices, you see everything's up, 2 or 3, 4% even, which is a very, very bullish scenario. So what you can expect is that when something bullish happens after kind of a rest, these bulls are ready to just jump on again and have a field day with it. So I just wanted to point that out. It's a very important concept in trading, reading the momentum of the market and making decisions based off of that, not just moving averages and raw price action and everything like that. You have to look at the context of price as well. So I'm going to hang on to this for a little bit. Hopefully we can get a few more cents out of it. And there we go. Nice. So we're up over $800 on the trade, and it's continuing to move up. I'm going to give it a little more room to move up and probably exit the position. All right, this is a couple of minutes later. It's 2:45 p.m., and I'm just looking to close this position out. We have over a $950 gain on this, so I'm going to take my 700 shares and get out of this position. Okay, got filled, 700 shares. Open price 131.03. Close price 132.45 for a $993 profit. That's what I consider an excellent play. Not to say that I'm an excellent trader, because obviously I have losses just like anybody. But that was your textbook momentum play. I mean, it really gave you all of the elements of a good breakout or momentum play. So that was that. It's 2:47 p.m. Done for today. Pick it up again tomorrow or next week sometime. I just wanted to get a video in for you guys, and this just happened to be a really good example of a nice momentum play.